Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host. So today I'm joined with Ryan Chaw. How you doing, Ryan?
I'm doing great. Thank you, Kirk.
Great. Well, glad to have you in the show. Ryan, before we jump in, tell us a bit about your background.
Yeah, so I was a pharmacist turned real estate investor. I basically was inspired to get into real estate investing from my grandpa, who bought a couple properties in the Bay Area back in the 1950s. And as we all know, the properties there appreciated like crazy. The rents went up, and he was not only able to retire early, but help cover part of my college tuition and that of my brother. So I realized that real estate was one of the best ways to create generational wealth very early on in life. And I just wanted to get started as soon as possible. So I started off, I graduated as a pharmacist in 2015, and I bought my first property in 2016. It was a $262,000 house in Stockton, California. And what I did is I rented out by the bedroom to essentially double the rental income that I could make on that property. And I continued doing this because it worked so well. And what I did is I rented to my alma mater pharmacy students and just kind of continued on renting to professionals, grad students, and now I have 14 rentals making about $50,000 a month in rental income.
So how do you rent it by the bedroom? It sounds like is that like tenement housing or is that's like a different kind of thing? What how do you do that? Like what are all the regulations?
Yeah, as far as regulations, it just depends on the city. There are some cities that might have some regulations against having too many unrelated tenants, like they might limit it to five unrelated tenants. But a lot of times, what you can do is do a change of use to make it into a rooming house slash boarding house. And then once you have that license, you can go ahead and do this. With California, I didn't have any restrictions in the cities that I invested in. But basically, I will take a three-bedroom house and I'll turn it into a five-bedroom or six-bedroom house. And because I rent out each room for about $600 to $700 per month, a six-bedroom house will make anywhere from $3,600 to $4,200 per month typically. And so I just kind of continued repeating this process in four different cities.
So how do you choose the right property? You have to find a property with like a lot of bedrooms or what's the key to that?
Sure. Yeah. When I first got started, I just wanted to be very close to the college that I graduated from because I really connected with the students there. I knew the tenant base, so I was like, I'm going to go get started in a place that I'm familiar with because I already know what neighborhoods are the safe areas and unsafe areas. So let me go ahead and get started there. Now, I didn't know too much when I was getting started. My first property was only $262,000, but I put $100,000 down payment on it. So I didn't really know what I was doing. Most people, of course, put like a 20% down. But then my goal was just essentially just work as hard as I can and buy one property a year. And that's what I did for the first 5 years, which led me to make about $10,755 in rental income per month after the end of the 5 years. And this was when I was around like 28. And that's when I was actually became a millionaire from real estate investing.
So you were doing all this while you were a pharmacist?
Correct. Yes.
So um and you just retire from being a pharmacist and just what did you do? Like this is
Yeah.
obviously kind of a part-time gig.
Right. So when I was 23, that's when I started pharmacy. And then 8 years later, I was able to actually retire August of 2023 from the pharmacy job because the cash flow replaced the pharmacist income. And that's when I said, okay, I'm going to go ahead and retire and just be full-time real estate. So a lot of times, like throughout the day, I spend most of my time kind of coaching others how to do this, create their own student housing portfolio, their own student and professional housing portfolio, as well as maintaining and managing my portfolio.
So you made a comment. You said, well, you retired so you could do this full time. Well, managing a real estate portfolio is not retirement. That's a job. So
Yeah, right.
so are you still doing that full time or have you outsourced it or what?
I outsourced it. So I have two VAs. One of them is 40 hours a week. The other is 20 hours a week. I pay them $7 an hour. and they're like rock star VAs. I mean I went through this company. I found they were like a talent company, and they found really good VAs. The VAs that I had in the Philippines were a lot better than the ones I hired in America. Um, and so yeah, they were very driven people, and I just trained them to kind of handle all the marketing and management processes on the properties.
So you have them do all the marketing, the management? How do you have them
Right.
do the management? How does that work? Because a lot
Yeah.
of them
So
are broken. I mean, they speak English, but it's a little different.
well, they actually do speak really good English for these two individuals. But as far as the management piece, like if something comes up on a house, like let's say something breaks down, what happens is the tenant will submit a ticket through Zendesk. So they'll just email support.zendesk at, what your company name is, and it'll create a ticket, and then basically the VA will assign the ticket to somebody. So we have some plumbers, electricians, HVAC, roofers. We have all the specialty contractors on the back end that we can call in case something breaks down. So he basically triages it, decides who to send it to, and then that person goes out and fixes it. We give them the lockbox code to go in there, fix the job, and then send us a check essentially. Now I do also have somebody who's kind of like boots on the ground who does things like property tours and general like helping with move-ins and move-outs. And we pay her on a per cases basis, maybe like 35 to $60 for a move-in or move out, for example. So they're not charging like an 8 to 12% property management fee or anything like that. It's never a percentage of the rental income. It's always on a per case basis charge.
So where do you find that you're able to, because I mean, real estate is a nickel and dime kind of business. You really have to kind of shave your pennies. Like, you can outsource it, but it costs a lot to outsource property management, right? It's better to insource it. A lot of real estate investors do most things themselves because, in order to make a profit, they have to. So where have you been able to kind of shave the profits off in what you're doing compared to what other people are doing to make it profitable?
Sure. I would say so. One of the biggest things I've did was insource the marketing essentially. So, well, technically it's outsourced, but it's like within our organization. So I don't have the property manager do the marketing because if they do the marketing, that's when they ask for basically 8 to 12% of the rent, or they're asking for the first month's rent. I don't feel comfortable paying that much to a property manager to do marketing because most of the marketing can be automated and most of it is actually very simple. In fact, nowadays, because I have, I would say after the first year or the second year, that's when I started getting a lot of referrals from students because students like talking to each other. In fact, word spreads like wildfire on the college campus. So once I became known as a go-to landlord, I provide great service, I provide really good student housing. I start getting just text messages from random people saying, "Hey, I heard you're a landlord very close to the college. I'm interested in your properties for next year." And so nowadays, most of the marketing is just done by word of mouth. And that means basically I don't have to market it. They kind of just come to us. And that's true for two of the cities that I invest in. All of our tenants came through a referral, not through some, ad, for example. So that's one way. But two, I would say it's just a high in demand market. There's always a need for student housing because these students are paying like $600 or $700 per month to live off campus, but also still very close to the campus. Still very close to the campus versus paying on-campus pricing, which is $1,200 a month. And you have to pay for a meal plan and you have to pay for parking. So it just makes sense for a lot of them. They save half the rent just by living with us, and we're very close to campus, walkable distance.
So in doing this, I would imagine that, with most real estate, at least certainly in my part of the country, you're not able to make much of a profit. I mean, Massachusetts is a bad place to be a landlord anyway, but in general, you're not able to get great profit in many parts of the country. So, I mean, I know with things like Airbnb, it's a way for people to increase their profit, but they have to do a lot more work. Like what
Yep.
you're doing is kind of in that vein where you have to do more work, get more profit. Like what kind of profit percentage are you able to generate? And maybe you can compare that to what is out there if people are renting for like a whole year.
Yeah, so I aim for a minimum of a 20% cash on cash return. Typically, sometime my larger rentals are 30 to 40% cash on cash return. But the reason why you make so much more profit is if you just do the math, you have 6 bedrooms times 700 is $4,200, and your mortgage payment is anywhere from 1,500 to maybe 2,000. Well, $4,200 minus 2,000 a month is leaves you with $2,200. Now, if you set aside like $300 per month for just general maintenance costs, which is like $3,600 a year, you still are left with a good $1,800 to $2,500 per month, depending on what property you buy. My largest property makes $6,550 a month, and the mortgage payment on that is 2337 or something like this. So yeah, you can make a really good amount, over $4,000 a month, potentially, buying the right property.
Yeah, no, that's great. But now, do you find that other people in the area try to replicate what you're doing? Because I would imagine if, I don't know well, let me ask first, what does the area go for if you were to get like an annual rental? Like
About
what are the
1,500. Yeah, 1,500 to I would say 2,200 if it's a very large house.
Okay, so you're really not making any money if you were to buy it and rent it out.
Yeah, just as a whole family, yes, you wouldn't
Okay.
make too much. Versus this, yeah, it's double or triple.
Do you find other people are copying you in the area?
Not too much. There are a few, but they're all kind of like slumlords.
Yeah.
We were talking to our attorney recently, and he's like, "Yeah, everyone else out there, they don't really care for their tenants as much as you guys do. They're kind of like slumlords, so you don't have very much competition." And honestly, this is kind of one of those niches where a lot of people don't know too much about it. There's not too many people even coaching on this, and that's why I love this niche, and I try to coach. I coach people through this, and so like it's just so much better than Airbnb in the sense that you have consistency. You have yearly leases. You can even do 2 year leases. I have a house that's booked out until August of 2027 already, and a group of 6 students. They're all friends, and it's just the consistency is created because of the referrals that you get. You'll get like, for example, I had a group of 6 baseball players and they stay until August of 2025. And they brought in that group of another 6 baseball players that are staying from August of 2025 to August of 2027. And so I didn't have to do any marketing for that house. That one's already, rented out for like 3 years, 4 years, right? So because of that, you have such a strong consistency and you also have very, very good cash flow.
Well, it sounds like because of the way you're doing it, you could buy virtually any property around you and make good money at it because if people are, I mean, it's similar to what it is around here. I mean, the cap rates in Boston a few years ago when the interest rates were really low were like two
Right.
in the city and sometimes it was just break even. A lot of people are buying break even because they're like, oh, it'll appreciate, which is, in my opinion, dumb, but
Yeah.
teach their own. But my point is that's happening in a lot of areas. So, what do you do you find it problematic to find properties? You just why not just go out there and scoop up as many as you can?
You want to have a certain strategy to it. So, in every city, there's obviously the good and the bad neighborhoods. There are go-to neighborhoods that graduate students and healthcare professionals like to stay in. And oh, by the way, I do rent to healthcare professionals as well. So, I'll have these physician residents and physician fellows who sign like 2 year leases as well. But yeah, I try to be in the neighborhoods that everyone's kind of talking about. So, for that, I usually go to Reddit and I'll just type in Reddit best places to live off campus, John Hopkins University, or whatever, right? And then I'll look through all the posts and see what specific areas that people are talking about. Hey, yeah, everyone lives in Little Italy, everyone lives downtown, whatever, right? At least I know what they're talking about so that I can buy a house whenever it pops up in that area. Now, of course, you have to make the numbers make sense. So the house, generally speaking, has to be relatively large, 1,500 square foot or more at least. I usually aim for like 1,800 square foot or more to get the 6 bedrooms in there. Because every single bedroom you can add obviously adds another 600 or $700 to your bottom line per month. So those are the things that I look for.
Okay. Um, so are you still acquiring properties or are you just happy with what you got?
Yeah, yeah. I acquired my last one last year, so I'm just still looking for properties for this year. I think, there's a lot more popping up. I just haven't seen one that fit my boat yet. But, I do buy a property every year, at least one. And I've been doing it for 8 years. So I have 14 properties right now. So it's just,
Nice.
whenever they pop up.
Do you find that do you think you'll keep building this once a year or do you think at some point you'll kind of exponentially grow it?
Yeah, so I do have an option. I bought my first couple properties on 15-year mortgages. So my plan is in 5 years, basically, if I sell one of the properties, I pay off like three others. So I'll have three properties that are completely paid off, no mortgage payment, bringing in about like 8,500 a month. If I wanted to keep it like that. But the other ones are already kind of cash flowing. So it's always a tough decision for a real estate investor. Do you pay off some? Do you continue to leverage? For me, I kind of want a combination of both.
How do you make that decision?
I would say at the beginning, it's a smart idea to try to use leverage wherever you can, just because it's kind of like planting seeds. You want to try to plant as many seeds as you can, and then you grow a forest rather than plant one seed, pay it off, and then plant another seed, pay it off. It's better to kind of just you let inflation erode away at the debt over time. The mortgage payment technically gets lower and lower because of that. And ultimately, at the end of the day, like with the leverage that you're using and the appreciation that you get a good return on your money invested. So let's say you put a 20% down and the property appreciates 3%. You don't have a 3% return on your money. You have a 15% return on your money. You can just, do the simple math on that.
Right. So I guess I don't know how expensive the properties are in your area. I know around here properties are really expensive, but
Mhm.
um, if you're thinking through the decision, should I just keep buying more and leverage, or should I pay them down? Um, I find it hard to come up with a justification for selling a property and paying things down. Like, why would you just keep the if you're making a few $1,000s per property
Sure.
per month, why would you ever pay it down? Just keep it.
Yeah, that's the devil's advocate. I would say if you want peace of mind, it could be a good idea to pay off some. Now, this is something that I would do after like 10 years of investing already in real estate. I'll pay off some to have that peace of mind. Even if they are vacant, all I would have to pay is property taxes and insurance. But everything else is just gravy. It's just nice knowing that you have good depth or no depth on some of the properties. So yes, I do like refinancing when the interest rates drop and everything to take out cash so I can leverage it and buy more properties. But I also like to have eventually, a good amount of them paid off so that I have that peace of mind.
What do you find is a good amount of cash to keep aside per property just in the just in case circumstance, in case they're
That's
not
a really good
rented?
question. Yeah, I would say. I mean, there's definitely some properties where, all of a sudden the HVAC dies or the roof needs to be replaced and it's like 10,000 or 15,000 or 12,000 typically. So I would say have maybe 10,000 per property, something like this. Maybe 7,000 to 10,000 if you depends on how conservative you are.
Okay. Yeah, that's fine. And then it sounds like you were doing this during COVID. So how did you
Yeah.
handle the COVID
That was
issue?
scary. I did panic. I was like, well, all the schools are online now. What do we do? But I found actually a lot of students still wanted to stay at the house because they wanted to study together, and their home environment was like too chaotic. They didn't like living with their parents. They wanted to go off to college and be with their friends and study together and all of that. So I would say about half of my people ended up staying just because of that. But then the other half, I asked them, hey, if I dock the rent by like $100 a month, would you be interested in staying? And the other, like I would say another quarter of them said, oh yeah, I'd be interested in staying if you take a bunch off of the rent. And so that's how I kept 75% of my students. And then the other 25%, I just marketed like crazy. I just start calling people that were on my waiting list. I just, basically just connected with as many people as possible. And then I was able to fill all the rentals. I remember, if I remember correctly, I was making $9,300 per month for rental income versus my normal $10,755 per month for rental income. So I took about a $1,400 per month cut, but obviously that was way more than the mortgage payment still. So I was just fine during COVID, luckily.
So let me ask you this. With per room rentals, do you find that everyone who rents are friends, or do you find unrelated people kind of renting together as well?
I would say it's 50-50. Sometimes I would say like half my houses right now, they're filled with a group of friends and they just approached us, said they want to take all 5 bedrooms and they're willing to pay, 3,100 or 3,600 a month, whatever it is. And then they just lock in the house. And then the other half are just kind of like individuals we kind of pair together based off of what major they are, if they're in grad programs or if they're healthcare workers. So we have like a house that's like healthcare workers, medical residents, medical fellows. We'll have another house that's like pharmacy students, another one that's like dental students, etc.
Okay, cool. Um, so what are some kind of like tips and tricks you can give people that are looking to consider this as a strategy for real
Sure.
estate investing?
Yeah, so there's like 4 things that students care about. The first one is convenience. So the number one thing you should look for is how close to the school can I get? Because when students look at all the rentals around the school, they're like, I want to be as close as possible. What's the cheapest place I can get as close as possible? That's what they're thinking in their head. So number one is how close to the school you can be. Number two would be safety. If the neighborhood's not safe, no one's going to stay there. The parent's going to drive to it and they're going to go like, oh, from here to the school, it looks like it's a very dangerous area. I don't feel safe. Well, like my kid walking to, at night, late at night to the off-campus housing. So that's number two is safety. Number three is affordability. So you really have to be within the student's budgets. Even if you're like $40 or $20 above their budget, a lot of times they're like, oh, that's above my budget. I'm not even going to look at it. So let's say their budget is like $800 or less. If they see a listing for 820, they're like, oh, that's too high for me. I'm not even going to look at it. So if you just lowered it by $20 a month, then all of a sudden they're like, oh, that meets my budget. Sure, I'll stay there. So you have to really think realize that students have a very specific budget in their minds. And then number four is community. So students only want to really stay with other college students. They feel a little bit uncomfortable with people who are, staying there that aren't college students. So usually the mix that I aim for, and in fact, all of my tenants are either college students or they work at one of the local hospitals as a healthcare worker.
Okay, cool. Now, when it comes to property management, there's a physical nature that you can't do with VAs. So how do you handle that? Do you do that yourself or do you hire that out?
Yeah, so the VAs are trained on how to triage certain calls. Like, let's say there's a frozen pipe and it bursts. They'll call a plumber that will get in there right away, our trusted plumber. So having like building up that list at the beginning or as fast as you can of trusted plumbers, electricians, handyman, roofers, etc. That's really what created a really good system for us to be able to handle all the maintenance issues within like 24, 48 hours, or like as fast as possible. We aim to handle everything within 24 hours. I do also have, again, a boots on the ground who can go in there to do tours, to go through the house and kind of have a checklist like, is there any mold or any dry rot? And she'll note where those are. And I pay her on a per cases basis to do that. She also kind of like helps coordinate with the contractors that we do have come in to make sure that they're doing the work and that it gets done correctly.
Awesome. Great. Well, I appreciate you coming to the show, Ryan, sharing your wisdom with us. Any kind of final thoughts you can leave us with before we wrap it up?
No, I really think rent by the room is becoming very necessary in today's society, just because, especially for real estate investors, it's very hard. And like nowadays with multifamily, with the high interest rates, they're getting hit really hard. Single family is always very hard to do with the high interest rates. So this is one of the best creative strategies that you can use to double that rental income so that you have the cash flow which can pay for unexpected expenses, which can allow you to scale a bit faster, and allow you to hold on to that property, obviously, during tough times. Because student housing is very consistent. Every single year, there's new students coming in. So I do provide coaching for this for anyone who is interested in getting into this creative student housing rent by the room.
Awesome. Well, Ryan, really appreciate you coming to the show. Where can people find more about you?
Yeah, my website is www.newbierealestateinvesting.com/guide, and I have a free PDF guide on how to do this. What are some of the lessons that I learned? What are some of the things to watch out for as a newbie investor? That's www.newbierealestateinvesting.com/guide, and newbie is spelled Newbie.
Awesome. Well, thanks, Ryan. Appreciate it. We'll talk in the future.
Sounds good. Thanks, Kurt.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Ryan. Really appreciate him coming to the show. Now we're into the panel portion of the show where we have our very own Barb Freeberg. Hey, Barb.
Hi, everybody. Great to be here. Love the topic.
Great. Well, glad to have you here. And we also have our very own Doug Hagren. Hey, Doug.
Well, good morning or good afternoon or wherever this is going to be, Kirk. Sorry, I can't. I'm getting lost these
Good
days.
day. Good day,
Today,
Doug. Good day.
good today, Kirk.
Good day.
No, I think
Yeah.
it's always an interesting concept for me. I've known people. I've grown up in Columbus, Ohio, that had that they basically their entire families, history, multi generations had housing around Ohio State University. And one thing about it, as long as the college education piece continues to be some in demand, I think that there's always going to be tenants in demand. So very interesting.
Awesome. All right. Well,
Hey,
Barb.
wait a minute. Have to interrupt. Are you from Columbus, Ohio?
Born and raised.
Why did this never come up? I'm from Cincinnati.
I had no clue. No, there you are. Yes, absolutely. First 25 years spent in Columbus. So
No way. Two
yeah.
Ohioans. How you going to cope with that, Kirk?
Seriously, how did you guys not meet? Like, I
I
mean,
don't know.
Like
Well,
I know
Cincinnati's
everybody from Boston. Like, why wouldn't you meet someone from the
I
same
know.
state? Doesn't make a
I
lot
well,
of
know,
difference.
right?
Yeah.
because Massachusetts is about as big as from one suburb to the other suburb of Columbus. And growing up in Columbus, Cincinnati was on the other end of the world, about over 200 miles away. Like that was, I even grew up a Cowboys fan because Cleveland Browns and the Cincinnati Bengals were like on the other end of the world from me. So, we
Yeah.
get big. This is what happens in big states, Kirk, not these little insular states like you live in.
And neither team is any good. Anyway, moving
That
on.
never happened.
All right, Barb, what were some of your takeaways from the interview?
Well, I've been into real estate since I was in my 20s. My family was in real estate. I've bought properties, I've rented them out, I've sold them, I bought them, I rehabbed them. I thought Ryan's idea was genius. I thought it was so smart. And frankly, I felt, now maybe other people don't have this experience, I felt from this podcast interview, I have all the information I need if I wanted to implement this strategy. I think the income potential is fantastic. Look, it's going to be a hassle getting it set up, getting the VAs to run it instead of hiring property managers, which between you and me is a pain in the neck. And I have yet to see a good property manager. So you train the VAs to do what needs to be done. And many colleges are like Stockton, where University of Pacific was, where he went to school, is, it's an hour and a half from the Bay Area, from San Francisco, San Jose, but it's cheap. Same with Sacramento. You could think of Merced if you want to stay in California. Plenty of same type of concepts. Look for colleges that are in good schools in less popular areas. And once you have the system set up, I think the profit potential is so much greater than your typical real estate buy and rent out.
Yeah, well, that's the key for the show. Barb says that's all we need to know from the interview, so I guess we're done. So, Doug, what are some of your thoughts? I mean, one takeaway I'll say before Doug is one thing you said, Barb, is you never met a good property manager. There's only two property managers that you can trust. One is yourself. So, Barb, look in the mirror. That one you can trust. That's a good one. The second one is somebody you hire and train yourself. Um, Outsourcing, I haven't seen anybody who's ever been happy with an outsourced property manager. But if you hire them in-house and train them, you can get a good one, but you're obviously paying them a lot of money.
Well, but that's where the VAs come in.
Yeah.
Hire his idea to hire virtual assistants from the Philippines, and you can get those online. I've actually used several for my own business in the past, and very smart, very good English, very trainable. And once they're trained, and I loved his idea of buying one property a year. So he's keeping it manageable.
Yeah. Well, Doug, what are some of your thoughts here?
Well, I think the biggest the as I kind of said opening this up, and you know that this touches base with me because with the college planning and obviously the cost of tuition and room and board is always important and family and when I talk to families, they are most schools, not most, many schools require the students coming in to live in the school dorms at least the first year. That is not always the case, but after that, you can generally take whatever that cost of attendance amount that's filed with the Department of Education, if it's still around. And all joking aside, no, but they can take that number and you can use that number as a basis for using your 529 or whatever towards anywhere that you want to have room and board up to that amount. So many families in year 2 plus do look at trying to live off campus. And now I am seeing more and more schools, interestingly enough, who are doing what he's doing. They are actually buying those off campus housing, they are actually renovating them, and they are becoming the landlord. Of the properties off campus. One school in particular, DePaul University, in not DePaul, but DePaul with a W in Indiana, is actually doing that. Like they have off-campus housing all over, but they own it. So that's interesting because that could mean that as schools kind of start to think about this in different ways, they could end up being the prime competitor to one of these types of strategy, and they obviously have the resources to compete at a much more aggressive level. But there, as long as traditional education is popular, okay, and we know there's all this talk out there about go to trade school, go to community college, forego normal education. It's a waste of money. We're certainly seeing the numbers of enrollment dip for a number of different reasons, which of course many people will correlate in a lot of different ways, whether it's just coming out of Y2K or a fundamental permanent shift in how we view college. There's going to be a demand for off-campus housing, and you get a new stream of renters every single year that are going to come through, and they are locked in. They're locked in for the next 10 months of the year. So I think it's a phenomenal opportunity. I've seen it. We're going up in Columbus around Ohio State. As I said, I knew people that own these properties. I think the biggest risk for me is, obviously that tends to be one of two things. It's either already elevated pricing because the demand, that you get in that area is always there, or you're getting, as a lot of the major schools are, they're not in the greatest areas of town. You get a lot of areas that are actually tend to be more in higher crime, lower income areas or on the, cusp of that. And so you have an element of these other variables there of what's the neighborhood like around it, safety, but also upkeep. A lot of times your tenants aren't necessarily the best at thinking about the damage that they create on a good football weekend.
Yeah. Yeah, I mean, so one thing I want to know, Barb, is because I know you're a real estate guru, or what were in your past at least. I mean, I love this style that I have a friend who invests in college dorms or buildings, which I think is excellent because colleges, well, 5 years ago, I would have thought colleges aren't going anywhere, but now I wonder with AI and with the changes in education and Trump's announcement that he was going to make an American university, which I think is interesting. Nobody picked up on it, but to me, I look at it and say, well, if I can get all the best education online, why would I spend 100 grand a year to get it in person when I could get it for 2 grand online? I mean, it's a reasonable question to ask. Even if it's 10 grand, even if it's 20 grand, it's not, 100, 200 grand to party or face off. To me, that's a bad investment. So I expect AI is going to change the dynamics. So it makes me wonder, like, I love this business model, by the way, just absolutely love it. And I think what Ryan's doing is brilliant. But, is this something that makes sense? Is this something you would consider, or are there even more stable forms that are kind of carved out like this, Barb? What are your thoughts?
I loved it. I loved it so much that I was thinking if I had the wherewithal and if I wasn't at the end of my career, if I was at the beginning of my career versus the end, and I had the desire, the need, whatever, I would definitely do it. But I resonate so much with what Doug said, which is, in so many words, college students are slobs. And they damage everything. And so that factor has to be built in. I also wonder, because he also talked about using this type of model for, say, residents or starting out medical professionals, if you do it near a hospital, they might be a little more responsible. Graduate students might be a little bit more responsible. So I could definitely see implementing this. I loved that Ryan didn't just dive in and I'm going to buy a whole mess of properties, but he did it deliberately, one property a year. And he didn't get himself over his head. And, I might stick with graduate students. I might stick with the medical students. And I also might, maybe ramp up the deposits just to cover those expenses for the damage.
I actually love the medical school idea, Barb, and for one big reason is because they can't damage it. They'll never be there. They will literally come home to fall asleep, to turn around the next day and work their next, 47-hour shift. So that's brilliant. I mean, through a med school, I mean, I think you certainly will have a more difficult time with with vacancies if you get that rigid, because you're not going to have the same number of volume coming through to look, you look at those. But again, if you can keep the property in the right area, if you can keep the property looking nice, especially in the medical side of things, doctors have, they tend to have kind of high tastes, right? So if you can keep it looking nice in a nice area and it's convenient considering how often they are going to have to be back to the hospital based on their hours of rotation, based on when they get called in for emergencies. I think that there is something, something in this that is timeless.
Yeah. Well, it's interesting. I mean, we've seen real estate prices dropping and rents are dropping in certain states, in Texas and in Florida. And it makes strategies like this all together that much more timely and interesting. I like the idea of grad school for sure. I think, people have more drive, determination, money, and probably maybe a little bit more organized than a typical college student. I don't know about you, but when I was in college, there were places people were renting and they were trashed every single year. College students didn't give two Fs. Graduate students, I would imagine, don't live like pigs because by that time you're a little bit older. You're not going out and getting drunk every night, maybe every other night, but not every night. So, maybe you're a little bit more well-mannered. So I think, yeah, I mean, I think that's certainly a better one. We're gonna keep this short in the interest of time because I got bus driving duties in the summer. So what final thoughts, Barb? What are some final thoughts people should take away from this if they're looking to invest in real estate or they're looking to find a niche like this, more importantly?
I've always loved real estate, and I think Ryan mapped it out how you can do this yourself. It's not rocket science, and I think the steps are pretty straightforward. It's going to take a certain amount of time, and he also discussed adding bedrooms if he buys a three bedroom and he wants to make the dining room into a bedroom, you're going to have to make some adjustments and stuff. But I think it's a great idea. I also liked one other thing he said, which was leverage is great, but there's also a psychological aspect once you get a couple of properties going to, have a property paid off once in a while. It just gives you a lot more profit and a lot less stress. But I would encourage the key things I would say are keep in mind of who your tenant is. And I think you have a rigorous tenant screening process. I also liked what he said of be aware of the neighborhood. Get yourself a string of professionals that you can call on that are there to do the repairs and buy at the right price. Kirk, you said it. I've said it a million times. Never buy for appreciation. You just don't know if it's going to be there or not. So I'm Barbara Friedberg. You can find me online on my YouTube channel, also at Barbara Friedberg Personal Finance.
All right, thanks for coming on, Barb. And Doug, final thoughts from you.
Barb, I think you've just blew everybody's mind there on don't buy for appreciation because I think what we're talking about is a mindset change after 20 years and one to two generations of thinking that real estate only goes up. So yeah, be prepared. And Kirk and I talked about this on a recent podcast. Times are changing, asset allocations changing, correlations to bonds and stocks are changing, inflation's changing. We're in a new world right now. So I agree with you. Do not look at real estate as something that is going to just be a source of appreciation. And I heard something interesting today. So the Bus family just sold the Lakers. Okay, and they sold the Lakers for what, $10 billion, and they bought, Jerry Buss bought it for 60 million, 65 million. And somebody put out there, he goes, if you look at how much he bought it for and how much how much they just sold it for, that was only a 26x return. You could have made more money throwing the money in the stock market during that entire time. Here's the miss that doesn't account for all the income that got thrown off by the Lakers over that 50 years. So I think that's the key thing to realize with real estate is it is the component, especially investment real estate. This is not residential, is the component of being able to have something that can appreciate. But obviously, the income that you're going to get off of it, there's other tax benefits that come into that as well. When you think about college planning as well, one of the things that we look at is with smart families asking a better question: can the cost become an asset? And we do look at whether or not it makes sense for families individually, whether you follow his strategy or not, to consider purchasing income producing real estate near the child's campus. Because then you could have other kids in other friends paying the rent. Your child could potentially have rent free for college. So this turns housing expenses into tax smart investments. They generate cash flow, potentially support siblings of future generations. And if it's done right, it's not just a roof, it's a strategy. At Mergent College Advisors, that's Mergent, Mergent College Advisors, we help families integrate college planning into their broader wealth strategy, whether it's aid optimization, tax efficient withdrawals, or owning real estate that serves both a benefit and a purpose and a profit. So if you want to fund elite education, assuming it's still going to be there for your family without draining your balance sheet, or maybe even grow it in the process, visit mergentcollegeadvisors.com. Smart money doesn't guess, it plans.
Great. Well, thanks for coming on, Doug. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.